ESG investing drives value. ESG investing also drives profitability. In the first half of 2020, $275 billion of new financing was raised on capital markets, which included sustainability bonds, syndicated loans, and equity capital issuance tied to sustainability outcomes. Now, given the clear value proposition and clear bottom line benefits, marketing efforts around ESG investing should be simple and straightforward, right? Well, not quite, not all the time. Now, whether we're looking at across the board ESG standards or greenwashing, stating facts around ESG investing in a simple, direct way calls for solid marketing and communication strategies. To discuss those strategies with us is Paul Ellis, Impact Investing Marketing and Social Media Consultant and founder of the Sustainable Finance Podcast. Paul, thanks for joining.
Thanks very much for having me on the program today.
So, Paul, some people think it's a bit disingenuous, if not downright nefarious, to build a brand around ESG investing. So should brand building happen organically, or does building a strategy actually water down the value in some way?
Well, I started building a brand in ESG investing back in 2002, Kisa, and I found it to be completely in line with what my clients were interested in learning more about and participating in related to their investment portfolio strategies. This has been a rapidly growing part of the industry, as you said, over a long period of time, and the pace is picking up now, and more financial advisors and investors want to learn about this part of the industry. So I think we're right in stride with this being fast growing, and there are, as you said, a lot of things to consider.
So if we're thinking about differentiating factors between ESG portfolios, how should we call out differentiating factors, and what are those differentiating factors that should be called out when marketing?
When an advisor or anyone is marketing for ESG investment strategies, they should be very clear about the key indicators that they are focusing on by company, by industry, and by sector of the economy related to allocating capital to ESG strategies. ESG is a data set, if you will, that is added to fundamental financial analysis and supports, especially today with the concerns about the environment and the emerging social issues that we're seeing now, is more important than ever for company management and investors to scrutinize how firms are evaluating their participation in these areas in addition to fundamental financial analysis.
Great. So with that, Paul, walk us through your top 6 tips for marketing ESG portfolios with impact. What would you start with?
Well, I would start with the thing that drives all the rest of it, and that is sitting down with your clients and creating an investment policy statement that integrates their personal values into the investment process. This is the best first step, I found, always, because it not only does it allow the financial advisor to better understand what things matter from an investment standpoint to the client, but it also deepens the relationship that an advisor, whether it's a woman or a male advisor, builds with their clients over time. And by the way, just a little sideline here is the demographics of our industry are changing rapidly, as you know, and women will be controlling much more wealth over the next 10 to 20 years. And so it's really important that when advisors are working with either individual female clients or couples that are male-female couples, that they really incorporate the woman's perspective into this process. And the investment policy statement is a good place to start with that. After you do that and get clear on what it is that your clients are interested in, then I think it's really valuable to engage those clients in a dialogue about their ESG focused consumer preferences. All of us make decisions as consumers that affect the companies that create the consumer goods that we are purchasing or considering making investments in. When you think about it, Kisa, the same process goes into making a choice about what companies to invest in. So for advisors who dig deeper into their clients' consumer preferences, they will learn a lot about those clients' ESG investment preferences in the process. The third step is really to start slowly. There's a lot of information, a lot of data to share and to consume and to understand, both on the advisor's part and on the investor's part. And so it's best to, what I say to most advisors that I consult with is, dip your toe into the water first and then ask your client to join you, gradually allocating assets in their portfolio to ESG strategies and giving those allocations time to start reflecting what ESG is all about. Now, that's happened very rapidly in the past 6 months, as all of us know now in the marketplace. And you mentioned it at the top of the call, that ESG preferences are really emerging, especially on the social side of the ledger in the last 6 months or so, and requiring company management to look much more closely at those issues. But it's not something that you have to push into all right away. This is a gradual process for most financial advisors and investors to take on. One of the ways that an advisor can do that and incorporate some marketing outreach to their local community is to put together an ESG-focused regular email or a newsletter, for example, that you write periodically that links articles about ESG investing, or once again, about consumer companies and how they're managing these types of issues, and making that available and sending it to all of your clients. And that was one of the most effective tools that I found for bringing in new prospective clients, because my clients would pass it on through their email chain to other people that they thought might be interested in participating in ESG investing.
Do you find that there was an issue with a lot of other communications, a lot of, as people say, noise out there, where people felt that they were being overwhelmed by newsletters and posts, or did you not feel that was the case? Did your clients communicate that wasn't the case?
Well, that's a very good question, Kisa, because you're right. We are subject to a lot of inflow through the media these days. But what I saw was that my clients especially tuned in to what I sent them because we had already had these long-range investment planning discussions. And they saw the newsletter as an opportunity to take in more of what I focus on or was focusing on as their financial advisor. So my newsletter was one of the first things that my clients opened when they got it. Now, I did it quarterly, and it does take some time and effort, but it's also something that's very valuable as a tool, as I was going to say, for attracting local media attention to an advisor's practice as well. I hope that answers your question.
Oh, yeah. I'm waiting to hear the other tactic.
Sure. Then what's also important is to focus on the very personal, direct introductions and client relationships that all advisors use to build their practice and to market to their community in the first place. In this respect, building the ESG part of your practice is not any different from the way you've already built your practice, or if you're new to the industry, can be fully integrated into your marketing plan for how you're going to grow your practice from day one. Senior advisors that I work with and consult with are often very concerned that as they begin putting together a transition plan to gradually move out of their practice and bring in new, younger investors, they're concerned that introducing new ideas like ESG investing might be disruptive to the continuity of the relationships that they have. I'm sure you talk on your programs on a regular basis about all of the studies that say going forward, both women and younger investors are more and more interested in ESG strategies. And so senior male advisors in particular should really pay attention to this part of how they introduce their clients and invite other people to join the practice. As we all know, face-to-face or today, a computer-to-computer conversations is one of the most effective ways to get to know new potential clients, as well as continue to work very closely and deepen the relationships you already have. And then finally, I think one of the keys to sending the message to your community that you're in this for the long run. You want people in your community to consider you as an ESG investment specialist, is to identify 1 or 2 or 3 local NGOs or nonprofit organizations that are doing things related to ESG issues that you can participate in, either as a contributor or board member, attending events, getting to know their membership, working with them to put on marketing events for their members and your clients at the same time. That's a really good way to cross-pollinate the way that you can market yourself as the local ESG investment expert.
That's amazing, Paul. I'm really interested, totally align and agree to the points about who the new audience is and where the demographics are really shifting. So, Paul, amazing insights. Paul Ellis, thank you so much for joining.
My pleasure.
And also, thank you, our audience, for joining. As always, let us know how we are doing. Leave a comment or reach out to us on LinkedIn. Also, you can reach out to me directly. Meantime, make sure to check out Elena Filipova on the Sustainable Finance Podcast coming up soon. Thank you for joining.
We invite you to subscribe to the Refinitiv Sustainability Perspectives Podcast on iTunes, Spotify, or wherever you stream your content. What did you think about the podcast? Leave us a review on iTunes or follow us on LinkedIn and Twitter for updates on our show. You can even check us out on YouTube now. Thank you for joining. See you next time.